Hey, my name is Tucker Krause, and welcome back to my channel. In today's video, got another news update for you guys, so let's not waste any time and get right into it. Alright, new home sales continue to contract. US July new home sales 511k, expected was 575k, and June was 590k, so of course it's fallen off quite a bit here. And we can see this with this chart here that shows the month-over-month growth. We can see that we were down 12.6%. month over month, and so when we then look year over year, we're down almost 30%, down 29.6% when it comes to US new one family houses sold. And so of course that's not good. We can see it's been red almost all year here, and so of course overall this doesn't look too good, especially when we now move into pending home sales continue to contract. US July pending home sales -1%, expected -4%, and June was -8.9%. And so we can see a similar deal here. It's down 1% month over month, and it's been red almost all year, and it's down 22.5% year over year. So again, this one not as bad as new home sales because it did not do as bad as expectations were expecting, nor as bad as June, whereas we saw new home sales were worse than June and came in below expectations. Overall though, with the amount of contraction we've seen here, that's not a good sign at all. But let's get into something that is good. Japanese nuclear restarts official. Japan plans new measures to boost nuclear power to cut emissions and avoid shortages. Government will consider extending lifespan of reactors beyond maximum 60 years. Economy Ministry aims to restart another 7 reactors by summer 2023 or later. Huge Japan nuclear policy reversal. Japan will consider building next generation nuclear power plants, Nikkei reports. This is important because Japan essentially barred construction of new nuclear power plants after the 2011 Fukushima disaster. So of course this is big news because this shows that Japan is truly serious about bringing on their nuclear fleet, which is of course incredibly bullish for uranium because that is a lot of extra uranium demand if this comes online and they start building additional power plants. And to be honest, we kind of knew this was coming, right? Prime Minister Kishida, he was basically running on restarting nuclear, and well, now that's been made official that that is happening. And so of course that's, if you were looking at your portfolio this week, that's where all that green came from. And just on that same day here, SPUT could get even bigger. So this is just a good little thread here from Grain Jones, and Uranium Insider here just simplifies it. The carry unwind provided significant spot market liquidity, large volumes purchased by SPUT without in-kind upwards pressure on price. That buffer is largely gone, so the next round of financial flows induced SPUT buying should equal more dramatic moves in price. So to simplify it even further, if there's a spot premium, the spot price is going to go up even quicker. Though, and that's of course if we manage to get a substantial premium, and honestly from what it seems that's already kind of filled. We did manage to eke out the teeniest tiny premium when we did run like crazy, but now it kind of seems like we set up a bit of an evening star pattern. So we could dump off significantly because we're seeing here, right, the rest of the market, maybe the bear market rally seems to be over if you guys saw that giant red candlestick on Friday after the Jackson Hole speech, which we will get into later in the video. Personal spending and income missed. US July personal spending month over month 0.1%, expected is 0.5%, June is 1.1%. US July personal income month over month 0.2%, expected 0.6%, June 0.6%. July month over month CPI adjusted spending 0.1%, income 0.2%, and that's of course because CPI was flat in July. So overall this isn't good. We saw them come in below June as well as below expectations, and the funny thing with, well, not funny, it's actually not good because it's bad for the economy. But with June, when you also adjust that for CPI, both these numbers were actually negative, and that's been the case for quite a few months of the year, that when you adjust it for CPI, that spending and income's both been negative. And of course, it's even worse than that because CPI, of course, lies to show inflation is lower than it actually is. And so overall, it doesn't look like these numbers are very good. So we'll have to keep watching to see if, because this is what I think is going to be really interesting to watch, if we see these numbers start to consistently come in negative before adjusting inflation. And Powell confirms no pivot is coming, so this is from Jackson Hole. Powell will likely require restrictive policy for some time. Powell, economy continues to show strong underlying momentum. History cautions against prematurely loosening policy. Powell, history warns against prematurely loosening policy. Central bank is moving policy purposefully to a level sufficiently restrictive to return inflation to 2%. Restoring price stability will take some time and require using central bank's tools forcefully. Powell, reducing inflation likely to require sustained period of below-trend growth. Benchmark overnight interest rate at long-run neutral estimate of 2.25% to 2.50%. Not a place to stop or pause. And so this is just kind of short thread here that shows a little bit of what Powell was saying at Jackson Hole, and this is kind of a good little summary of what went down. And so basically all we have here, right, is that, once again, confirming no pivot is coming, right? Because after the July FOMC, a lot of people are starting to say, wow, the Fed acknowledged that the economy is slowing down. This means that they're absolutely going to pivot, which of course we can see here is not the case. And we talked about how back in July, that's probably not the case. And this confirms it. This is not financial advice. Do your own research. Thanks for watching, and I will see you next time.